Hello everyone. Topic: Fundamental of Partnership. Subtopic: Treatment of Interest on Capital. One of the most important item, interest on capital. What is the journal entry for interest on capital? We have to pass two journal entries, one for adjusting and the next one for closing entry. If you want to pass adjusting entry, interest on capital account debit, two partners capital account or current account. Why current account? When capital account is fixed, then it will be transferred to current account. It cannot be transferred to capital account. But here I have tried to explain you the treatment of interest on capital in PL appropriation account in two different cases. I have taken one example. Normally interest on capital is appropriation of profit. This is not charged against profit. It is not expenses. So normally we consider as appropriation of profit. Now if you check case number 1, I have given one example. A and B, two partners having capital of 1 lakh and 4 lakh rupees at the beginning of the financial year. Their interest on capital 10% per annum, which is very simple calculation. Interest on capital for A is 10,000, B is 40,000. Interest on drawing is also there, but the amount of interest on drawing is already mentioned, 800 and 200 rupees. 800 and 200 rupees. This is 200 rupees. Now net profit is also given in the question, that is 30,000 rupees before any interest on means interest on capital or interest on drawing, both have not been considered. Fine. PSR equal. Now with this example, I have tried to explain two different cases. Case number 1, interest is allowed. It is mentioned in the partnership deed, interest is allowed. Now I am again quoting this. Interest is allowed is mentioned in partnership deed. If it is not mentioned in partnership deed, Indian Partnership Act 1932 says no interest on capital. So interest on capital, whatever it is, must be mentioned in partnership deed. Now it is mentioned in partnership deed that interest is allowed. Allowed means it is appropriation of profit. Now here you have to remember one thing. When interest is allowed, interest amount, interest on capital, the total amount cannot be exceeded the net profit plus if there is any interest on drawing. Again I repeat, when you allow interest on capital, you have to check how much is the total interest on capital, and whatever total interest on capital you have, that cannot be exceeded the amount of net profit plus interest on drawing if it is there. In this situation, I have purposely kept interest on drawing to explain two different cases. Now if you check here, your net profit is 30,000 rupees, your interest on drawing altogether is 1,000, so total is 31,000. As you have seen in your calculation, your interest on capital altogether is coming 50,000 rupees. So as the rule, since it is appropriation of profit, you cannot allow more than net profit plus interest on drawing as interest on capital. So it means your interest on capital is restricted to how much? 31,000 rupees. So here I have written one notes. The total amount of IOC cannot be more than your net profit plus IOD, which is interest on drawing. Therefore 31,000 will be distributed as IOC, interest on capital, in capital ratio. Capital ratio means 1:4 in Interest on capital ratio, your interest is 10,000 and 40,000, again 1:4, that also I have shown here. And ratio of appropriation of profit, this I will explain in a separate video. What is ratio of appropriation of profit? With one example, I will explain what do you mean by this. Now, if I distribute 31,000 in 1:4 ratio is coming 6,200 and 24,800 rupees. So 6,200, 24,800 rupees, altogether it is 31,000 rupees. It means when interest is allowed, the partners cannot enjoy entire amount of interest on capital. Here, one most important thing can be asked: why interest on capital is allowed to partner? The situation when their capital contribution is not equal, but their PSR is equal. In this case, you can check your PSR is equal, but interest capital contribution by them is not equal. Now, in this case, who will get the benefit? The person who has contributed less amount of capital. And who will get the, who will be the sufferer for this? The person who has contributed more capital. So, to keep his interest, upper hand, we allow interest on capital. So, in that way, certain amount of profit certain amount of net profit is appropriated in capital ratio. Again, I repeat, when one partner has contributed more amount of capital, he is a kind of loser in this business because PSR is same, but his contribution as capital is more than other partner. So to protect his interest, certain amount of profit is distributed in capital ratio. So automatically, since his capital contribution is more, he will get more profit. And whatever remaining profit will be there after allowing interest on capital will be distributed equally to all the partners. Now, if you check my second case, here it is written interest is allowed. But I have mentioned one more thing here, irrespective of profit. It means whether profit is there, not there, in both the situation, you have to allow interest on capital. It means now it is not appropriation of profit like the previous case, it is charged against profit. When interest on capital is charged against profit, considered as an expenses. And when it is considered as an expenses, we supposed to show this thing in profit and loss account instead of showing to PL appropriation account. And that is why you can check, first I have prepared PL account. In PL account you cannot write by PL account. So I have written by profit, I have mentioned within bracket before interest on capital is 30,000 rupees. Now interest on capital is shown in profit and loss account as an expenses. It is not considered as appropriation of profit and it is distributed there 50,000 rupees. And now the difference is coming there 20,000 rupees because you have already shown as an expenses 50,000, you have profit 30,000. So there is a loss of 20,000 rupees. Normally this 20,000 rupees we distribute to the partners here only. But why I am not distributing here? Why I am transferring this 20,000 rupees as net loss to PL appropriation account? Because we have to take interest on drawing from partner. Since in this case interest on drawing is there, that is why you cannot stop your sum here. You have to carry this to PL appropriation account. Why we are carrying, again I repeat, why we are carrying this 20,000 rupees to PL appropriation account? the reason behind interest on drawing. Just to consider for a moment that interest on drawing is not there. Then what you will do? Then this PL appropriation account is not required to prepare. Then whatever net loss is coming, here only you transfer by partners capital or current account, the case may be, and transfer to both the partners in their PSR. But since interest on drawing is there, 20,000 I have transferred here to PL account, net loss 20,000, IOD is given in the question 800 and 200, so naturally their net loss is reduced by 1,000 and it is now 19,000. And which way this 19,000 will be distributed? In their PSR. And what is their PSR? It is given equal. So 19,000 is distributed as 9,500 and 9,500 rupees. I hope by doing these two cases, interest on capital account, more or less it is clear. But the day when I will come with the video of ratio of appropriation account or ratio of appropriation of profit, you will come to know what do you mean by ratio of appropriation of profit, then it will be more clearer. But again I repeat, you have to remember while doing that interest is allowed irrespective of profit, whether it is charge against profit or it is appropriation of profit. If you do not consider in that way, maybe there will be some problem. Thank you.